Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the number one source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter. All right. We will get rocking and rolling. Welcome, folks. This is Saturday Night Dialogues, February the 7th, 2026. We have a very, very detailed call for you tonight. We are going to go over, just so that you may not be aware, I'm going to let you know, there are four major agencies. Many of you that have been following Goldilocks for a while, you already know this. There are four major agencies, folks, that oversee the global currency reset. These are the four agencies that oversee all countries' currencies in some way, shape, or fashion. That is the World Bank, the U.S. Treasury, the International Monetary Fund, and the Bank of International Settlements, the BIS. And so the BIS released a report on global currencies and the outlook of global currencies for 2026, and we're going to touch on that tonight. It's a very, very amazing outlook that they have. Then, of course, we're going to touch on Iraq's high-level meeting that occurred with the United States and the status of the dinar for international status. And then last but not least, the emerging market currency update. And for those that also may not be aware, this may be for the first time you're hearing this, but whenever you hear emerging market currencies, if you have dinar, if you have the dong, or you have any of these other, most of the other major, not major, but the non-major currencies. When I say major, I'm speaking of the US dollar. I'm speaking of the Japanese yen. I'm not talking about those. Those are not emerging market. Those are not emerging markets, and those are not emerging market currencies. Those are developed markets. The US, developed market. China, developed market. Russia, developed market. Therefore, they have developed currencies. Emerging market currencies. Iraq, Vietnam, Venezuela, so forth and so on. We're going to show the report on the outlook on emerging market currencies for you tonight. And also that outlook is from one of the largest wealth management firms in the world that Goldilocks shared. That's Franklin Templeton. They have over almost 1.5, almost $2 trillion in assets that they manage. We're going to get into that. Let's get into some prayer, get into some quick announcements, and get into the call. Father God, we would like to thank you. We come before you with honor. We come before you with humility. We would like to ask you to continue to cover each and every person that's on this call. We ask you to bless those who need blessed, heal those who need healed, cover those who need covered. And we ask that you do this, Father God, even if people don't even know that they need it. We ask you to give them insight, not just insight, but foresight and forethought, to be able to understand and see clearly the blessing that they have, that they're awaiting for. We ask that you give them a sense of calm, a sense of peace, a sense of assurance. And we ask that you allow us to be that voice to do so. We ask that you continue to allow each and every individual to not only be a blessing to themselves, but others, but to leave something behind for those that come behind them, to leave the world in a better place than when they came. We ask that you continue to allow each and every voice that comes before in this community, no matter where they are, no matter what channel they come from. We ask that you, Father God, at least speak through them so that they can speak to your people, and for the light and the truth in some way, shape, or fashion to be able to come out. We thank you for this in advance in your precious name. Amen. All right, folks. The Goldilocks QF room. That's the Quantum Financial Room. That is, of course, a read-only room now. That's where we were there for over a year and a half. 12 hours a day, 6 days a week, poured into the beautiful people. It's a read-only room now, but the library of information is still there for anyone to learn. Then we have D's room, where D drops articles from around the globe on what's happening in the global financial system. And then last but not least, of course, we have Goldilocks Global Banking News on YouTube, with over touching close to 23,000 subscribers, over 83 countries, and 2.5 million views from around the world on the channel. It is growing fast. All right, folks, let's get into this. Sniper, I believe you are here, my good man. Okay, looks like I need to allow you to come to the microphone. You can unmute. How you doing, sir?
I'm good, brother. How about yourself? Good evening.
I'm doing great. Good evening. We're going to rock and roll with this. I'm going to touch on the very, very first one, and then we'll come back to you. I just wanted to make sure that you're able to unmute and you're ready to go.
Yes, sir.
All right, folks. The very, very first, and I know many of you, this is probably the first time that you're on this call. So I'm going to share something with you for those of this the first time, and this is going to be pretty repetitive to some that may already be aware of it, but it's a good reminder. This is how the currency revaluation is being formulated by the Trump administration, and this is from April 2024, several months before the re-election, before the presidential election when Donald Trump was re-elected. This kind of gives you insight into what was expected to happen during, or let me reframe that. This was an insight into what the Trump administration's plans were as far as the revaluation if Trump were to return into office, which he did. It reads, quote, currency revaluation is likely to be a priority for some members of a potential second Trump administration, mainly because of the viewpoint that an overvalued dollar contributes to the trade deficit. But a weakening dollar could have other approaches. Folks, if you want to know why we continue to share with you, you should ask the question, why not? If you want to know why we share that the revaluation of currencies, which will make every last one of you, why do we share this from the Trump administration? Want to know? My question to you is, why should we not? Is this not being shared all over in every place that you can think of? This is the actual blueprint that is telling you about the thing that we all have before us and where it's coming from. Currency revaluation. Why is the priority of the administration? Which is the deficit, the losses in billions, actually mean trillions to the U.S. economy. What they decided to do was flip. So I know many of you hear whatever you may hear about the RV. Would it not be good to at least understand that you will get an idea when you see what's happening in the global financial markets, when you see what Trump is doing when it comes to tariffs and everything else, because tariffs is trade, you can start to begin to connect the dots to get a better understanding of the currency revaluation. So just so that you're clear, there will not be from the Trump administration or anyone else that comes out to say, hey, folks, hey, world, hey, America, this is the currency revaluation. This is the RV happening. That's not going to happen. And just so you're aware, revaluation is not a bank term. It's not in the banking industry. Revaluation of currencies in the language of revaluation of currencies. However, leveling the playing field is the terminology. The new digital banking system whereby all assets will be revalued in the sense of real world values. That's the language. It's not RV per se. That's not the technical term. That's not the verbiage that is utilized within the banking system. That is language that is primarily utilized within the Dinar community, and that's okay. So I'm saying that to you so that you don't have a trained ear when you're listening to Trump administration or any of the officials or any of the global banking institutions that you may follow in mainstream media. Don't expect them to say the word RV. Don't expect them to say the word revaluation of currencies. They may, but don't expect that. So, and I say this also so that you don't miss certain terms that are mentioned in the global media about revaluation. Because if you're looking for that word revaluation, you're going to miss the real information to prepare you. When you hear currencies, when you hear leveling the playing field, when you hear de-dollarization, meaning the dollar getting weaker, that is under the umbrella of the RV, currency revaluation. So I'm just letting you know that so that to prepare you, so when you are paying attention to channels or media outlets, so that you're aware not to expect the exact terminology revaluation / GCR, so that you may feel unprepared or you may feel that you're missing something when it actually the terminology that is used, the technical terminology that is used may go right over your head. All right. So currency revaluation, although it's right here in black and white from the Trump administration, is likely to be priority for some members of potential second Trump administration. Everything related to finance and geopolitics, the tariffs, trade, it's all connected to currency revaluation. Yes, the RV. All right. And weakening the dollar, connected to the revaluation of. Anytime you hear or see in any media outlet anything related to the US dollar getting weaker, you should start feeling a little tickle in your tummy because the weakening of the dollar is the telltale sign of the strengthening of the currencies that we hold. Some of you, this may be the first time hearing this. For some of you, this may be repetitive. But if I have to repeat it over and over and over again so that at least one of you understands it and capitalizes on it, job well done. Job well done. All right. Now we're going to get into fundamentals of the global outlook on the global currencies. Remember, there are four major agencies that oversee the revaluation of currencies, that oversee all currencies. Several podcasts before, with over the last year and a half or so, I've done a deep dive into the agencies and what they do. And Goldilocks shared over and over again how these agencies facilitate currencies throughout the world. Here we have the Bank of International Settlements. Remember, there are there is no RV without the Bank of International Settlements. There is no RV without the U.S. Treasury. There is no RV without the involvement of the International Monetary Fund or the World Bank. Here we have the Bank of International Settlements that actually did consultations along with the IMF, consultations for currency stabilization, which is code for revaluation. They did this for Iraq. They did this for Vietnam and other countries. And Goldilocks shared those reports in black and white. We outlined them and detailed them over the last year and a half or so. Now the Bank of International Settlements is providing this report. Goldilocks shares it. Fundamental leverage points have been actively interfaced, tested, and partially implemented within global currencies. Fundamental leverage points have been actively interfaced, tested, and partially implemented within global currencies as a part of the transition to a new digital economy. Folks, the new digital economy is the banking system whereby all of our currencies are within. This transformation involves shifting from traditional, which is the traditional old banking system, physical asset-based system, and intermediary heavy systems to the new digital banking system. And now here is, in black and white, on a silver platter, from one of the agencies that oversees the RV, the Bank of International Settlements, with their global landscape, the global outlook on global currencies. So you mean to tell me they can actually foresee what's expected to happen with foreign currencies? Absolutely. It's no different than if you're working in a company, let's say if it's a sales company, and they have monthly, quarterly, or annual forecast of what? Of their sales. The projected sales, their projected profit. So your company can forecast their expected revenue within 6 months, 8 months, 12 months, or more. Why? Because they have what are called fundamentals, the analytics that actually give a projection of accounts, meaning sales accounts, how many customers they have, what the size of those accounts are. It could be a $10 million account, 20 million, 2 billion, 5 billion, whatever sales may come of it. And they could project out what the potential revenue can potentially be months in advance. So the Bank of International Settlements is doing the same thing with global currencies. It's the same scenario. Analytics, fundamentals, projections based on real, not rumor, real fundamentals. The global, here it is, the global financial landscape from the Bank of International Settlement states in early 2026 shows signs of evolving fundamental leverage points and technical adjustments that could facilitate more authentic currency pricing, meaning exchange rates that are closer to true market-driven values. I'm going to repeat that again. This is from the Bank of International Settlements. Remember, there's only 4 agencies. These are global agencies for every central bank of Iraq, central bank of Vietnam, every central bank for every currency that you hold. The central bank of that country, they ultimately have a dotted line up to the Bank of International Settlements. The Bank of International Settlements sits at the top of the pyramid, for it's the central bank of all central banks. That's why it's the central bank that oversees all currencies, because all central banks oversee and govern all their own currencies. But those central banks has a daddy. Who's your daddy? The Bank of International Settlements. And what the Bank of International Settlements is saying, quote, the global financial forecast landscape in early 2026 shows signs of evolving fundamental leverage points. So this is where the analytics show the forecast, like a company that's like a sales company that's forecasting in advance of what their potential sales and profit may be. The Bank of International Settlements is doing the same thing for currencies right now. The fundamental leverage points. and technical adjustments that could facilitate more authentic. Is saying that these leverage points, meaning the analytics, the numbers, the contracts, the trade, tariffs, the gold, Basel III, we wrap all that together, and it's stating that these fundamentals could facilitate more authentic currency pricing, meaning exchange rates that are closer to true market-driven values. Folks, the currency rates right now are not true market-driven values. They're not true market-driven rates. They are human manipulated, intentionally devalued rates. That's not a problem at all, because you're on the other side. We all are on the other side of when the rates go to their true market-driven rates, true market-driven value. States less distorted by intervention, subsidies, or OPEC intermediaries, meaning the Bank of International Settlements is stating that the global outlook for the currencies that we all hold to market-driven real rates, real values, is because there will be less interventions by central banks to manipulate those rates. The reforms that Iraq implemented, Vietnam, and all these other countries, these are real fundamentals that allows the Bank of International Settlements to forecast that currencies will eventually move to their real rates and their true market rates. I'll continue from the Bank of International Settlements. It states, traditional currency markets have long been influenced by central bank policies. That's it. That's telling you central banks were the ones that were intentionally devaluing the currencies. Recent developments, though, the Bank of International is saying, recent developments including, here come more fundamentals that justify the currency rates to go up, including tokenized platforms and blockchain-based systems introduce new dynamics. So these new dynamics, the new technology, the blockchain system, tokenized platforms, these are all fundamentals that justify higher currency rates. Goldilocks shares by stating, for instance, it continues, tokenization of reserves and assets enable faster, more transparent cross-border settlements. This is just foreign currency exchange. Faster, cheaper, transparent, reducing reliance on corresponding bank chains and potentially allowing currencies to reflect real supply demand balances more accurately. This is where the accuracy of the rates will come into play. This is why the Bank of International Settlements is stating that foreign currencies will become closer to their true market-driven rates. The rates right now are not true market-driven rates. They're human manipulated rates based on old policies by these central banks that did not have reforms in place. They did not have digital asset regulations in place, similar to what we are awaiting for with the Clarity Act in the U.S., digital asset regulations. Goldilocks continues from the Bank of International Settlements stating, remember, emerging markets are the currencies that we hold. In emerging markets, stable coins have begun revealing true Forex rates. I'm going to read that again in case you missed it, in case it might went over your head. In emerging markets, which means the currencies that most of you hold, stable coins have begun revealing true Forex rates by bypassing capital controls and official pegs, providing continuous real-time price discovery even during crisis. What price discovery is when prices begin to break out from their old rates, and they begin to move up to a level, another level of prices. They begin to flatten off, which is called consolidation. I don't want to get too technical, but that's a new level, a new price level. And then it moves up again, a new price level, and then flattens up. And it continues to do the same. They are witnessing that happen right now. This acts as a leverage point, pressuring distorted systems towards alignment with parallel market rates. Broader shifts such as declining dollar dominance. Folks, this is the Bank of International Settlements telling you the same thing that the Trump administration said. Currency revaluation is likely to be a priority of a potential second Trump administration, large in part due to the overvalued dollar and the trade deficit, but weakening the dollar could have far-reaching approach. Here it tells you, the Bank of International Settlements, broader shifts such as weakening dollar dominance amid diversification combined with innovation, tokenized infrastructure is on its way. This is where you begin to see, this is like looking under the hood of the global currency reset. This is looking under the hood of RVGCR. See, on the surface, on top of the hood, you don't see what's happening underneath, the mechanics of it. You don't see the oil flowing, the transmission fluid flowing. You don't see the engine. You might hear it, depending on how old your car is or how it's built. You might hear the engine, but you don't see underneath the hood to know how it's running. The Bank of International Settlements, this report of what the global outlook of currencies, this is telling you what's under the hood. Even the Trump administration, the article from the Trump administration telling you what was going to be under the hood when he came back in office. Now the Bank of International Settlements, one of the four major agencies that oversee the RBGCR, they're telling you what's under the hood. They're forecasting what's going to happen with global currencies. This is giving you insight and foresight to foresee what's coming beyond what's on the surface, beyond what you might come across in mainstream media. Now, what we're going to do now, that is from the Bank of International Settlements on emerging markets. If you have, again, Dinar, Dong, all these other major currencies, not major as far as U.S. major, but major currencies, they're major to us who hold them now. Emerging market currencies. What we're going to share with you by Goldilocks next is what's happening also is what's called a convergence. I mentioned on the podcast the other day, for example, I'm going to share this analogy with you. Foreign currencies in the global market, their prices, their rates, they're like going north, south, east, west, all over the place for the last 50 plus years, historically. This is one of the reasons why there's been no real uniformity of currencies to move up in their values. However, what's being shown now, what's being reported now is what is called, and Goldilocks is showing it and sharing it, is what's called a convergence. Currencies going north, south, east, west. For example, you got the dinar going south, the dong going east, Boulevard going west. All this, that's what they've been doing. But with now moving into the gold back system globally, banks that are now on a uniform digital banking system, where now there's technology ISO 222 that has synchronized in all of the banking systems around the world, whether it's the central banks, mom and pops, credit unions. There's been a convergence now with the currencies, Well, now they are shifting not from all over the place in different directions, but to a uniform central convergence in one direction. And I have an idea what that direction is, but it's the emerging market currencies that are doing this, not the US dollar, not the major developed market currencies, not the Chinese yuan, not the Japanese yen, not the Canadian dollar, the US dollar, but the emerging market currencies are doing this. See, the US dollar, there's no convergence of the US dollar, of the currencies. The US dollar is getting weaker, so the US dollar is going south. Flying south like the birds from the north to the south in the wintertime. That's what the US dollar is doing. That's what the Dinar, Dong, and the rest of these emerging market currencies have been doing for a long time. Ha ha, not anymore. Franklin Templeton, Goldilocks is sharing. This is just one of the many reports from international, institutional investors. These are the firms that actually transact Forex in the trillions daily. Franklin Templeton is one of them. And they're now reporting on what's happening with emerging market currencies, and they're converging to one central direction. Sniper, you ready?
Yes, sir.
Let's rock and roll. I'm going to pop this on down in here. Floor is yours, my good man.
Yes, sir. All right. Emerging market currency convergence refers to a process where currencies of emerging economies gradually become more similar in behavior, characteristics, and performance to those of developed or advanced markets. This narrows the historic gap in volatility risk premiums, valuation discounts, and overall stability that have long distinguished emerging market currencies from major ones like the US dollar, euro, or yen.
1 second, beloved. Now, this is very important, folks. So now what this is showing is that the emerging market currency, which refers to a process where currencies of emerging markets, think of the currencies that you hold, they are gradually becoming more similar in behavior, characteristics, and performance to those of developed market currencies like the US and others. Where their US and others were strong and on top for so long, now the emerging market currencies that were down are switching places. Historically, you can go, young man.
Yep. Historically, emerging market currencies have been more volatile, prone to sharp depreciations during global risk-off periods, and often traded significant undervaluation due to factors like weaker institutions, higher inflation risk, political instability, commodity dependence, and limited international use. They carried high risk premium to compensate investors for the uncertainties.
Mm-hmm. Convergence happens through several channels. So what he's going to read to you folks is how this convergence now begins to happen. See, I know that many of you that are listening to this, you will grasp, because you're sharp people, you're sharp, beautiful, amazing folks. You're going to grasp what he's about to read from Goldilocks, and that's from Franklin Templeton, and it's going to connect some dots for you. And then I'll summarize it to help clarify. Go, young man.
Yep. Convergence happens through several channels. Improved fundamentals. Many emerging market countries have strengthened policies, better fiscal discipline, independent central banks, inflation targeting, reduced through vulnerabilities. Example, lower dollar-denominated debt ratios and structural reforms. This builds credibility and reduces the likelihood of crisis.
Lower dollar-denominated debt ratios, meaning, folks, these countries, they're ditching the dookie dollar. They're getting rid of that sugar honey iced tea. They're getting rid of it. And structural reforms. Sniper, I'm going to ask a rhetorical question. You remember all of the different podcasts and reports that we brought from Goldilocks about the reforms from Iraq? the economic reforms from Iraq, from Vietnam, from all the other countries, the structural reforms over the last year and a half. You remember those?
Absolutely.
So now I'm sure it makes sense to you. You already know this. You already, because you're the sniper. But it makes sense to you now from the last year to year and a half of seeing those reforms go into place and pass through the parliament in Iraq and Vietnam and others, to now seeing the Bank of International Settlements report that where the convergence of these currencies now is a result of the reforms that were implemented, a result of these countries ditching the dollar over the last year or so. Now you see the result of those changes that these countries made. I'm sure you see it now, right?
Absolutely. They had to build the guardrails for it. They had to set everything up and put it all together.
Exactly. All right, you can continue.
Yep. Increased international and liquidity. Emerging market currencies see rising global trading volume with more non-resident participation in Forex markets. Example, from 53% international share in 2007 to 83% in 2022 for the median emerging market currency per the BIS data. This makes them behave more like developed market currencies in terms of accessibility and depth.
Folks, developed market currencies. Let's take the U.S. dollar first. Take the U.S. dollar. The United States, for example. United States is a developed market currency. It's at $1, right? The Chinese yuan, ballpark, almost similar. It's to the dollar. It's a developed market currency. So let's stick with the U.S. as a developed market currency, the U.S. dollar. Now these emerging market currencies that are extremely low, meaning in rate and value, they are beginning to operate. They are beginning to behave like developed market currencies. So the dong, the dinar, and various emerging market currencies are beginning to behave. This is under the hood, behind the scenes, in the global markets. They are beginning to operate and to behave more like US dollar and other currencies in value. So this is what they're doing is they're projecting the trajectory of the rates of emerging market currencies. They're behaving more like the dollar now is not a good sign because the dollar is getting weaker. But think of what the Bank of International Settlements is reporting is that the emerging market currencies are beginning to switch and flip from the behavior of before to the behavior of how the US dollar used to operate, which was strong all over the world. So it's like the tide has turned, where the US dollar was strong all over the world, used by just about every major country, the US dollar. Now the US dollar is getting weaker. Emerging market currencies are getting stronger. The roles are beginning to reverse. So with that being said, as the roles begin to reverse, so do the rates. Go, young man.
Yep. Capital flows and institutional investment. As global investors, pension funds, and asset managers diversify away from over-concentrated USD exposure, especially amid U.S. policy shifts or dollar weakness, inflows boost emerging market currencies. This reduces volatility and pushes valuations closer to a fair value relative to developed peers.
Hold that thought, because what I want you to do is read this first paragraph again by the Trump administration, and then go back and read what you just read, because it's all connected. It's all connected. And folks, it comes back to the Trump administration's RV plan. Go ahead, man. Currency valuation is likely to be.
Yep. Currency revaluation is likely to be a priority for some members of a potential second Trump administration, mainly because the viewpoint that an overvalued dollar contributes to a trade deficit, said one former Trump administration official, adding that Lighthizer and his team are the primary advocates for the approach.
But weakening the dollar could have a far-reaching consequences. Now reread what you just read from the previous paragraph, and it's going to connect again, folks. Listen to it. Go ahead, young man.
Yes, sir. As global investors, pension funds, and asset managers diversify away from the over-concentrated USD exposure,
okay, hold on one second. That's very important. Also, is why they are moving away from the overly USD exposure is because the dollar's getting weaker. Go, young man.
Yep. Especially amid U.S. policy shifts or dollar weakness, inflows boost emerging market currencies. This reduces
inflows boost emerging market currencies. The inflows of foreign investors running away from the sugar honey iced tea dollar to the dong, to the dinar, to the boulevard, to name whatever emerging market currency. These countries are moving towards their own currencies and away from the US dollar. And these also, the major international investors, the wealth management firms that transact in Forex daily in the trillions of dollars, they are pumping their money into emerging market currencies. This creates a higher demand on the emerging market currencies, and the higher demand creates higher rates. It was the US dollar that was in high demand before. That's why the US dollar was so strong for a very long time. Folks, this is not feelings or emotion I am expressing. It is facts. It is fundamentals of numbers in the global financial markets. Men lie, women lie, numbers don't. The numbers tell the Bank of International Settlements, one of the four major agencies responsible for the RV, it tells them what's happening with foreign currencies, specifically emerging market currencies, which many of us hold. And what I would encourage you to do is to listen to the facts. You can read them. The articles are here. The links are here. But understand the facts. Facts over feelings. Facts over feelings. These facts will actually, when it speaks to feelings, these facts will end up making you feel real good when you understand your wealth and what's coming to you. Go, young man.
Yep. This reduces volatility and pushes valuations closer to fair value relative to developed peers.
So this is where the rates and the values of the emerging market currencies will begin to move up relative to their peers. Who's their peers? US dollar. What's the value? You already know that. What's the value of the yen? You can look it up. The Chinese yuan, you can see it. Emerging market currencies are beginning to move up to the level of their developed market peers. This is not Goldilocks opinions. This is not freedom fighter opinions. Folks, this is from the Bank of International Settlements. This is from the source. Just trying to give you a little context so you understand. Go, young man.
Yes, sir. Narrowing market or micro divergences. In recent contexts, like 2025 through 2026, convergence is evident as emerging market economies adopt more orthodox policies, while some developed markets, notably the U.S., face fiscal pressures, policy volatility, or slower growth. A weakening U.S. dollar compresses the U.S. premium, allowing emerging market currencies to appreciate and exhibit lower relative risk.
If you could read that one more time.
Yes, sir. Yes, sir. In recent contexts, like 2025 through 2026, convergence is evident as emerging market currencies economies adopt more orthodox policies, while some developed markets, notably the U.S., face fiscal pressures, policy volatility, or slower growth. A weakening U.S. dollar compresses the U.S. premium, allowing emerging market currencies to appreciate and exhibit lower relative risk.
Allowing emerging market currencies to appreciate in value and rate. This is rates, folks, and exhibit lower risk. So the risk was very heavy with emerging market currencies. The risk was very high with the Dong, Dinar, and all these other emerging market currencies before. The U.S. dollar was stable, not anymore. So now the emerging market currencies are becoming more attractive. They're becoming more stable. And as it's stating, because of the weakening of the dollar, the U.S. dollar weakness is compressing, allowing emerging market currencies to appreciate in value and exhibit lower relative risk. Currency revaluation is likely to be priority for some members of the second Trump administration. Larger part of the trade deficit, but weakening the dollar. Folks, weakening the dollar. This is the Trump administration reporting this in April of 2024, before the president before the election in late 2024, about what he would do when he came back in office. And here you have, a year and a half later, where you have the Bank of International Settlements stating exactly what's happening, exactly what the Trump administration said they would do relative to currency revaluation. Is that not what we're seeing? What's happening with Sniper, with weakening the dollar and emerging market currencies getting stronger? As a matter of fact, your firm one of the several wealth management firms, they've been sharing that with you as a client, have they not?
Yes, they have. It's a major theme in 2026, what they're focused on. Deglobalization.
All right, you can continue.
Yep. In practice, this convergence doesn't mean that emerging market currencies become identical to developed ones. The differences in growth potential, commodity exposure, and geopolitical persist, but it leads to lower volatility gaps, reduced undervaluation. Example, many emerging currencies seen as cheap or versus historical or PPP-based measures. Better resilience to global shocks. Potential for sustained appreciation when conditions favor risk assets. For investors, this trend enhances the appeal of local currency emerging market debt and equities, as currencies contribute positively to returns rather than acting as a persistent drag. Recent examples in 2025 performance show this dynamic in action, with emerging market currencies benefiting from dollar softness and inflows, positioning many for further gains, and process continues in 2026.
Listen, folks, what it's saying is recent examples is giving you the outlook for it. So just like a company that forecasts profit, return, and sales in advance, because they look at what the past performance has been and what the existing performances are happening. This is telling you recent examples, 2025 performance shows this dynamic in action, with emerging market currencies benefiting from the weakening or the softness in the US dollar, positioning many of the emerging market currencies for further gains if the process continues into 2026, in which we already seeing it, that it's continuing already. This is why they're able to forecast the appreciation in the rates and the values of emerging market currencies. Go, young man. Overall,
emerging market currency convergence reflects broader economic maturation, and global financial integration, making these markets less emerging in currency terms over time.
Overall, emerging market currency convergence reflects broader economic maturation, meaning the emerging market currencies that many of us hold, they were like little children, toddlers. They couldn't survive on their own. This is why they were dependent on the US dollar. But now what this is stating, because many of these countries were using the US dollar and just using their own currencies secondarily. But now what the Bank of International Settlements is stating, and what Goldilocks is showing, is that these emerging market currencies They have now reached a maturation phase. They're maturing and maturing into the global financial integration. So they're able to begin to move and stand on their own. They don't need the training wheels and mentorship of the U.S. as a developed country like they used to. They are less emerging. It just shows that these emerging market current countries are becoming less emerging in currency terms, but they are shifting towards more developed. And at that shift, and this is how, and this is why, the Bank of International Settlements can forecast the appreciation in the rates of these emerging market currencies, these foreign currencies that we hold. Now, what we're going to share is from the institutional money. This is the firms, the wealth management firms, the asset managers that have. This is I'm gonna use a funny term that one of my mentors, who's in his 90s now, from many years ago, 30 years ago, he used to when he would introduce me to wealthy people, he would say, "Freedom fighter, this is such and such person. He got more money than God." So these institutions, these wealth management firms, they have more money than God. That it's just a term of they have unlimited wealth. So these institutional money, these are the wealth management firms that many of you have relationships with. These are the firms that transact Forex every day in the trillions of dollars. These are the firms that are pumping billions and trillions of dollars into the dong, into Vietnamese bonds and securities, and also Iraq, and also other currencies in other countries. The institutional money. Go, young man.
Yes, sir. Yes, institutional money from global investors, asset managers, and funds is increasingly influenced global currencies, particularly through a shift away from the U.S. dollar toward emerging market assets. In 2025, the U.S. dollar weakened significantly, down around 7 to 9% on trade-weighted basis, driven by factors like Fed rate cuts, U.S. fiscal concerns, and diversification away from the U.S.-centric risk. This created tailwinds for the emerging market currencies, with many appreciating as capital flowed in, reversing years of outflows.
Many of the emerging market currencies, folks, saw appreciation under the hood and their capital inflows. This is for the last year and a half. Goldilocks has been showing, and we've been bringing it to you, how these emerging markets, these foreign currencies, were moving. They were shifting from the downside to the upside because the U.S. dollar was getting weaker. Now they're converging. Now they're beginning to flip the script. Now the roles are beginning to reverse. And we see the reports now coming out. Go ahead, young man.
Yep. Local currency, emerging market debt, and equity saw strong returns. Example, local bonds up 18%, stocks 26% in 2025, fueled by institutional inflows seeking higher yields, better diversification, and undervalued currencies.
1 second. Institutional inflows, folks. This is the Franklin Templetons. This is the Fidelities. This is the BlackRocks. This is the trillion-dollar asset firms, the JP Morgans. This is them. These are the ones. These are the institutional money. These are the institutions, the asset managers that are pumping billions and trillions into emerging market bonds and securities, because those investing, these are the capital inflows. By doing so, that's what backs the strength and stability of each emerging market currency. Go, young man.
Yep. Emerging market fundamentals improved, stronger policies, disinflation, fiscal consolidation, making them a resilient. making them more resilient. A weaker dollar reduces emerging market debt burdens and boosts competitiveness, encouraging further inflows.
So because of the dollars getting weaker, what's happening is it causes more of these trillion-dollar firms to pump money into the Vietnamese economy, the Iraqi economy, so forth and so on, also into gold and silver. This dynamic, go ahead.
Yep. This dynamic is contributing to a form of convergence for many emerging market currencies, narrowing volatility gaps with developed markets, reducing undervaluation versus the dollar, and positioning them for potential appreciation in 2026 if the dollar weakness persists and inflows continue. Mm-hmm. Analysis note, emerging market currencies remain undervalued, with room for gains amid expected Fed easing and global growth. However, risks like geopolitical tensions or shifting domestic investor bases could alter this.
Now, speaking of emerging market and the converging markets, this is more of what is expected with these currencies from which we hold. And what Sniper's going to read to you next. First, it was Franklin Templeton, multi-trillion-dollar asset firm, saying without saying that foreign currencies are moving up in value and going to revalue. Now, another Goldilocks is sharing another firm, just like Franklin Templeton. Here we have Morgan Stanley reporting the same thing. So here we have multiple global institutions that transact. Know what happens sometimes. That happens. Little technical difficulties. But we are back. You ready, young man?
Yes, sir.
All right, you can continue.
Yep. A converging market finance refers to a situation where previous divergent trends, asset classes, or economies begin to align or come closer together in performance valuation or behavior. Mm-hmm. This often describes the process of emerging markets economy. Sorry, can you hear me?
Yes, I can hear you.
Okay, sorry about that. This often describes this process of emerging markets, economies like those in the parts of Asia, Latin America, Africa, and Eastern Europe, gradually catching up to the resembling developed markets such as the U.S., Europe, or Japan. Mm-hmm. In terms of economic policies, growth patterns, financial integration, or investment perceptions, it can also appear in discussions of narrowing differences in equity returns, risk profiles, or currency dynamics between regions. Mm-hmm.
In broader global you can continue.
Yep. In broader global context, a converging market signals increased synchronization across worldwide financial systems, driven by factors like policy normalization, reduced U.S. dollar dominance, or shared responses to global events, leading to less pronounced divergences between advanced and emerging economies.
Mm-hmm. Now, this is very, very important. Very important. Now what we're going to do is jump right into the next, which it describes it even more of what's happening with global currencies and the expectation of their movement. It's not saying upwards, but it's saying it without saying it. Go, young man. Oh, did we lose you again? You can unmute, Sniper.
Sorry about that. We're having all types of technical difficulties.
It's all good.
The global economy in early 2026 shows signs of ongoing divergence, with growth rates, inflation paths, and monetary policies varying significantly across regions. Mm-hmm. Major forecasts from institutions like the IMF, Goldman Sachs, and others project steady but modest global growth GDP, around 3.1 to 3.3% for 2026, supported by resilience in the technology investment, especially AI-driven, fiscal support in some areas, and adaptability to trade tensions.
The global economy in early 2026 shows signs of ongoing divergence. Folks, this is the, if I can liken it to the awakening up of dead currencies. In the global economy in 2026, in early 2026 shows signs of ongoing divergence with growth rates, inflation paths, and monetary policies varying significantly across regions. This is where you have divergence and convergence happening with the currencies that many of us hold. And then we have the IMF. Remember, there are 4 agencies that oversee the RV. The IMF, International Monetary Fund, Bank of International Settlements, World Bank, U.S. Treasury. Here we have major forecasts from institutions like the IMF, Goldman Sachs, which is one of those major multi-billion-dollar firms with trillions in assets, that are all forecasting what's going to happen with foreign currencies, emerging market currencies. Go, young man.
Yep. However, this masks divergences. The U.S. often outperforms due to consumption and tech spending, while advanced economies like parts of Europe face headwinds, and emerging markets generally show stronger momentum around 4% in many cases, compared to advanced ones closer to 1.5 to 2%. A shift towards convergence in late 2026 or beyond is discussed in some outlooks, particularly as U.S. exemptionalism moderates growth trajectories between the U.S. and Europe. Others align more closely, example, via fiscal tailwinds in EU or reduced tariff drags, and global factors like policy normalization reduce extreme gaps. For instance, some analysts anticipate relative growth convergence after prolonged U.S. outperformance, with monetary policy paths becoming less divergent over time. Overall, the consensus leans towards persistent but manageable divergence in the near term, with potential or gradual convergence if tailwinds like softer U.S. rates and stable inflation persist, through risk from trade frictions, geopolitics, and uneven productivity gains could prolong splits.
Mm-hmm. For global currencies, go ahead.
Yep. For global currencies, divergence has contributed to a weaker U.S. dollar in recent periods. The example, notable depreciation in 2025, benefiting many emerging market currencies through carry trades. Reduced pressure on. Yep.
Hold on 1 second, because I gotta drop this. I gotta drop this at the bottom again so folks can see it. What you just read, and this is from the Trump administration. Currency revaluation is likely to be priority for some members of potential second Trump administration, mainly because of the viewpoint that an overvalued dollar contributes to the trade deficit. But weakening the dollar could have far-reaching consequences. Folks, it all comes back to the weakening the dollar will strengthen our foreign currencies. Folks, this is the RV. I know. You're looking at door number 1. You're looking at door number 2. You're looking behind door number 3. But door number 4 is telling you currency revaluation is likely to be priority of the second Trump administration, larger part to the overvalued dollar and the trade deficit. It happens on the water. Like Goldilocks has always said, watch the water. But weakening the dollar could have far-reaching approaches. And what Sniper just read. He just read it. But read it again, if you don't mind.
Yes, sir. For global currencies, divergence has contributed to a weaker dollar in recent periods. Example, notable depreciation in 2025, benefiting many emerging market currencies through carry trades. I'll continue.
Yeah, you can continue.
Yep.
You're so used to me cutting you off. You think I'm gonna cut you off when I'm not cutting you off.
I was waiting for the punchline.
You wait for it. But hold on, but let's pause here. Let's pause here. Let's pause here. Now that you pause, let's go and ride with it. Because think of it, Sniper. From April of 2024, when this article came out and it was shared with the Goldilocks team, Trump's plan for the RV, if he were to return to office, was large in part due to, well, it says explicitly because of the trade deficit, but weakening the dollar, the weakening U.S. dollar was a part of his currency revaluation plan. That's April 2024. He returns to office. He's reelected in November 2024. He takes office January the 20th officially of 2025. Last year, almost a little over 12, 13 months ago. In July of 2025, he shakes up the world with tariffs, steep tariffs on all these countries. Countries like Vietnam ring his phone at 4:00 in the morning. Mr. President, we want to negotiate with you. So all this begins to happen. And here we have the report from the Bank of International Settlements, the International Monetary Fund, reporting on the weakening U.S. dollar is strengthening emerging market currencies, the currencies that many of us hold that we're expecting to revalue. I'm gonna ask a rhetorical question, but I gotta ask it anyway. Do you see the connection?
Absolutely, I do.
Summarize it if you don't mind. I know you do, but I would like for you to explain it to the listeners. Were you from currency revaluation likely to be a priority of the second Trump administration if he were to come back in office? He came back in office. And everything that we're seeing in the global markets related to currencies. See, and this is the thing where a lot of people, unfortunately, may not be aware or may just miss what's being reported because the media does not intentionally, does not explicitly, and will not explicitly tell you folks, this is how the currency revaluation occurs. They're not going to tell you that. It's not going to be no public announcement with a bullhorn to say currency revaluation is here, folks. Come on in and exchange currency. That's not gonna happen. That doesn't happen. But what not only what will happen, but what is happening is the agencies involved with the currency revaluation, like the Bank of International Settlements, they'll give you the forecast. They'll tell you what happened in 2025 with currency, with emerging market currencies, which are the currencies we hold, and they'll tell you what's expected to happen in 2026. Morgan Stanley, same thing. One of the major international firms that deal in forex and foreign currencies, folks, in the Trillions Daily, tell you what happened last year, what's expected to happen moving forward. Franklin Templeton, same thing. Go ahead. If you could summarize it. I know I asked you to summarize
it. Absolutely. You know, Trump, he did a lot of things, you know, to make this actually happen. What ended up happening, one of the major things he did is he cut all countries off to where they weren't able to use the dollar and we weren't giving them aid anymore. That happened last year in July, where he actually cut these countries off and made them be able to stand on their own. And essentially what ended up happening is we started to see these countries have to really stand on their own for dominance and be able to operate in these markets, which essentially created a gold rush for these countries for them to be able to start, you know, working in true values. So what we're seeing is these markets and these institutions realizing that these gains that they had over the couple of years, over the times that their markets have been outperforming. So these institutions are really digging in and wanting to be involved now, especially that we're all going digital and there's no more human manipulation.
Right. This is why, folks, we call him the sniper. He knows.
Those tariffs brought everybody to the table. And what it did is it gave everybody a chance to re-rack, reset, and get ready to get in the game for real. No more hanging on Big Daddy Dollar. It's over with.
Is that good? You can continue. I'm not gonna cut you off anymore. Go ahead. You can continue. I say that now, but then I might. Go ahead.
No problem. Let me get back in here. Hold on one second. I lost my place here. All right. Excuse me. Emerging market. Reduce pressures on funding costs and improve competitiveness. A move toward convergence via more synchronized growth, narrower policy gaps, and softer dollar could support further.
Go ahead.
Yep. Could support further stabilization or appreciation in non-US dollar currencies, particularly in emerging markets with solid fundamentals. Example, anchored inflation and reforms. However, renewed divergence. Example, if the U.S. policies tightens unexpectedly, it might strengthen the dollar and pressure others.
Continue.
Yep. A convergence scenario where global growth evens out more, with emerging markets catching up to relative terms, would likely foster emerging market currencies growth and strength. This could occur through capital inflows, seeking higher yields, reduce volatility in local currency assets, and valuation catch up as investors diversify from U.S. heavy positions. Emerging market currencies have already shown resilience and lower volatility in some cases, resembling developed markets peers to more closely due to improved policy frameworks. In a converging environment, this could accelerate boosting in emerging market foreign exchange performance, especially in local currency debt and equities.
Boosting foreign exchange performance. Go ahead. Global economic divergence.
Yep. Global economic divergence and the path to convergence in 2026.
This is where, folks, it's showing. Goldilocks is laying it out in black and white. We're showing that the currencies that many of us hold, which are emerging market currencies, are reaching a breaking point, a crescendo. They are converging toward a central direction upward. Go ahead.
Yep. The global economy enters 2026 amid a notable divergence. Resilient U.S.-led growth from AI and consumption contrasts with softer momentum in parts of Europe and uneven emerging market performance. While policy paths vary across central banks, forecasts point to steady global expansion of around 3.1 to 3.3%, but with advanced economies lagging behind faster growing emerging markets. Late 2026 could see a gradual convergence as the U.S. outperformance eases fiscal supports fiscal supports align more, and trade adjustments moderate, potentially narrowing gaps and growth and inflation. This dynamic holds implications for currencies. Divergence has weighed on the dollar at times, aiding emerging market currency rallies through better financial conditions and diversification flows. A convergence phase was likely enhance this, promoting emerging market currency appreciation and growth via inflows, reduced volatility, and structural improvements in many emerging markets through risks like geopolitical tensions or policy surprises remain.
Currencies have indeed been leveraged. You can continue there.
Yep. Currencies have indeed been leveraged through digital infrastructures. Therefore, our currencies have been leveraged. Now, we wait for monetary policy shifts that will allow more trade flows through international trade contracts to move each currency forward.
Currencies have indeed been leveraged through digital infrastructures. This is whereby the stability of digital assets that are moving forward throughout the global banking system and reforms in the U.S. with the Clarity Act is forthcoming as well. And it states, Goldilocks stating, therefore, our currencies have been leveraged Digital assets have in digital commodities such as gold and other commodities backing of these currencies. Our currencies have been leveraged. Now we wait for monetary policy shifts that will allow more trade flows through international trade contracts to move each currency forward. Folks, this is why Goldilocks has always stated, watch the water. Where do foreign currencies move more than any other place in the world daily? In the trillions on the water through trade. When countries trade back and forth, goods and services around the clock, 24/7, 7 days a week, folks. And throughout the banking system, Forex is 24/7, 365. Because money never sleeps. When you sleep in the US, money is awake in China. When you sleep in the US, it's awake in Japan. So forth and so on, so forth and so on. Money, currency, never stops moving on the water. But it was mainly the US dollar that was used so much by many of these countries around the world. That's why, just like you heard the sniper say a few minutes ago, this is why the US has finally got to a point where these countries will no longer depend on the US dollar. They can't, not allowed. Not the new banking system doesn't even allow these countries to depend on the US dollar anymore. They have to give up the ghost. They have to give up that crutch of the US dollar and depend on their own currencies now. This is why these currencies are beginning to get stronger. This is why the forecast it shows you from 2025. The forecast of what's going to happen in 2026, what's happening with currencies getting stronger. Now, he just read from Goldilocks, therefore our currencies have been leveraged. Now we wait for monetary policy shifts that will allow more trade flows through international trade. And then we're going to end it by this from the Trump administration. Speaking of trade flows, speaking of trade and the importance of trade, and trillions in trade happens daily in foreign currencies. Currency revaluation is likely to be a priority for some members of the potential second Trump administration, mainly because of the viewpoint that an overvalued dollar contributes to the trade deficit. It all comes back to trade, folks. I know for the first time, many of you may hear this and you're like, what? All V is going to happen through trade because of trade on the water? All you got to do is read the Trump administration's article. It tells you. Goldilocks has just been saying this for the last four or 5 plus years, that this is how the RV will occur. But it's there for you to really understand it and grasp it. Beautiful people. Now, Sniper, that's pretty much it. All right. Folks love to when I put that gif of you at the end of the sniper. They love it. All right, beautiful folks. It's been a long night. I don't want to hold anyone up anymore. I hope this was able to sink in, give you some insight. Folks, be well, be kind, be in love. Stay tuned. We got more to come. This is going to be available for you all on Monday on YouTube. Like, share, subscribe. Get it out to the world. We love you, beautiful folks. Take care. Ciao.
Hello, beautiful people. This is Freedom Fighter. Thank you for tuning into our channel, Goldilocks Global Banking News. Everybody knows that Goldilocks is the #1 source for the RVGCR. People from around the world tune in to see what Goldilocks is sharing on the RVGCR. Don't miss your chance and get your latest updates every day. So like, share, and subscribe to this channel to get your daily podcast from the Goldilocks articles on the RVGCR. Brought to you by Freedom Fighter.